Hello, hello. How is everyone doing today on the stream? The daily plan streams are back Monday through Friday, 4:30 Pacific, 7:30 Eastern. I'm your boss, Joe Boss. I got a new setup here, and we are ready to dive into the charts. We got some news right off the bat. We got some information down the squawk. Euro area PMIs came in lower than expected. And I traded that actually this morning. On the dip that we got, we hit a pivot probability target, a low target for the week at 110.7. So I'm going to pull up the chart here. Let's go down to a 12-hour chart. And real quick, I'm going to update our settings here. We're in week 30 now. I believe so. Let me double check my settings. Yep, we are definitely in week 30 now. So if I go ahead and I unhide these odds and I hide that. Oh, check that out. Our little orange dotted line for our probability weighted pivot low for the week came in 4 or 5 pips away. I'm sorry for the 4 or 5 pips of inaccuracy. I'm sorry. That's just the noise and the randomness of the market, you see. Anyways, the low for the week on euro dollar could potentially be in, and this guy traded this. Yeah, I got long this. As the guy who keeps going short and short and short, don't get me wrong, you know, I did my risk management here, always expecting these down moves, right? But man, in these sort of run-up scenarios, for every one of these that go against me, I'll have 7 or 8 of these that do go in my favor. Not only that, but I've proven that I have had these sort of scenarios go in my favor in the past, even this year, just stand alone. I have so many recordings and streams of me doing this sort of stuff. But man, that is a call. Anyways, we'll see how that plays out for the rest of the week. Guys, if you're here in the chat, now is the time to make requests as I go through the rest of the news. Bank of Japan increases their forecast for inflation expectations. So let's check out any yen pair. Also, let me increase the size. There we go. Oh man, dollar yen is falling. Oh, so horrible. It'll probably go to S 0.5. We can check out the weekly low pivot probabilities. Yeah, check that out. Yeah, 90% of the time, your low for the week comes in above the weekly central pivot. But man, check that out. What a tail move lower that is. Yeesh. I mean, the low could be coming in right about now. Let's try with a further look back. See if that changes anything significantly. And it just loaded all the data for the last 5,000 12-hour bars. And it didn't change the distribution of low returns for the week at all. Fantastic. Which means that even though we just close to doubled the amount of data we loaded into this distribution, It really didn't change the shape of it at all. So, reason stands that this probably works out. Is this the best time to buy? Well, probably not based off that news. No, because a lot of future expectations for Japan are, hey, we're going to be hiking sometime in the fourth quarter. I mean, across the board, the expectations are that. Real quick, one thing that I'll do is I'll quickly screen share the Discord. So that's the Discord server. If you scroll down here, yeah, this is the trading group stuff. Scroll down here, this is the Outlooks channel. So you got banks like MUFG. There's all of MUFG's stuff. ANZ for New Zealand, BNZ for New Zealand. CIBC is a bank out of Canada. SEB, Scandinavian Bank. Another Scandi bank with Danske. Oh, and look, a big FX forecast update one, Wells Fargo. So there's all these banks here, right, in this Discord Outlooks channel. But if you look over here on the left, there's all these threads. These threads have Chat GPT summaries of all of these weekly economic forecasts. And these are forecasts for this week. So these are all, I mean, don't get me wrong, you should probably still be reading these things, because I was reviewing some of these Chat GPT outlooks that have been rewritten and posted here. Some of them are pretty darn thorough, like this one is very, very thorough about summarizing the expectations of and the information that's in these documents. And sometimes it's just worth your time to go and actually read through these documents, especially if you're on the newer side to trading, because all these documents are free and generally publicly available. They're not behind some paywall. They're not behind some, oh, you need an account, oh, you need this, oh, you need that. Just click on the link. It's on the clear web. And yeah, you're able to get some PhD level economic research for free. And yeah, sure, you can check out these threads and read all about it. And here I am just kind of glancing through it for maybe some topics. I mean, I'm seeing a lot of ECB talk from all of these. I mean, look, here's the summary of that FX forecast update thing that I brought up just a while ago. Oh, document forecasts $0 will be at 106 to 103 in about 6 to 12 months. Well, FYI, Danske Bank has been saying that $0's been going to go to 105 for effectively since last November. Oh man, and they're still on it. And look, here's their expectation for USD JPY. How topical. We were just looking at that. They're expecting USD JPY at 127 in 6 months and 125 in 12 months. Near term, it also has a bearish bias on the cross ahead of the July Bank of Japan meeting. Oh wow, maybe there's something in common across all these outlooks from all these different banking institutions that have hundreds of millions, if not billions of dollars to invest and trade with. Maybe there's some information in here that we can glean from actual professionals with their PhDs and their master's degrees and all of their access to proprietary trading information and all of their own special proprietary trading sauce, right? How they do their trades. Maybe there's something we can glean from their interpretation and their outlook and future trading expectations and the things that they're taking into account and learn from them. I've been reading these outlooks now for 3-4 years now. It's single-handedly been one of the easiest ways to acclimate in understanding how other real professional traders think. You can watch any, pardon the pun, Joe Schmo on YouTube, and half of the time they'll make forecasts that are just about as accurate as these guys, to be frank. But over the long term, they're more wrong than these bankers. And these are bankers, right? Now, look, don't get me wrong. Every single time you read an Outlook and you come across some new word, you can easily get confused, right? Thank God there's Google. Thank God there's Google. Look, if you've been watching me for a while, you know, Baus says read your damn Outlooks, right? If you're just starting off and you're freaking brand new to trading, the single easiest, fastest way to get competent is get good at reading professional outlooks. Because if you read these documents here and they just sound like a bunch of gobbledygook, then it means you don't know enough about the things that you're trading and the things that you're researching. That's what it means. And all this information here in this Discord is free, right? The link to it's in the description. Plan the Profit, it's my server. Come hop on in. Every Thursday, Friday, and Saturday, new outlooks for the next week come out. So all these outlooks, look when they were posted. They were posted 3 days ago. You had 3-4 days to read all this stuff. You telling me you can't read like a 10-page document in like a couple of minutes, right? So just take the time to read through this, especially if it's something that you're considering seriously in doing full time. Hell, if you're seriously considering to trade full time, you should be writing a lot. You should be reading as much as you possibly can, watching as much as you possibly can, researching as much as you possibly can, and then summarizing in your own words and thoughts what you're actually about to do, right? Before you try and go do it. And paper trade on that for a while, frankly. Especially if you're brand new. And once your words and your actions and your trades are all lining up well, and you can rationalize why you have a future expectation for why a trade is going to work, and then you actually see it work, does it make sense to actually, put an investment into your active discretionary trading skills, right? You can have all the strategies in the world, right? You can have pivots. We can go back and change, go back to the charts. You can have pivots. You can have these range probabilities. You can have all the fancy statistics indicators. You can get everything you want, right? Anyone will sell you anything just to try and get you some of your money, right? $300 a month, $400 a month, $500 a month. Sure, they'll take, I only charge $100 a month for that reason. When I look at pricing and I think, is this geared towards retail traders? Who is this product geared towards? For my products, I know most of the guys who, they're maybe trading a couple $1,000s, right? So if I go ahead and I ask for like $500 a month, I'm immediately putting them into like a 20, 30 something odd drawdown immediately from money that they would have had with trading. Whereas if it's like, okay, $100 a month, it's like maybe a 5% drawdown. Maybe they're just paying it off with their income. It's not actually eating. Like if all the tools you're paying for are causing you to have to draw down your trading account because your income, your living income, can't pay it off, or your trading income isn't that super fantastic, right? Your nest egg isn't that huge, then you got to seriously take a second thought about paying for that trading subscription or that Bloomberg subscription, right? You got bigger problems with just having like a net income to support yourself first. And a lot of people who are getting into trading who are young don't even think about it like that. They get a windfall of inheritance, right? Or they get some bonus. Oh my God, let's just talk about all the people who got stimmy checks during COVID and how much money those guys wasted. Oh my God, they made so many millionaires during COVID just by people going out and saying, hey, I can help you win in sports betting. And I've only been betting for 6 months. Join my group for, $100, $150, $200, $250, $300 a month. And I'll, let you copy paste all my sports bets. Most of those groups just total bunk, total nothing, right? And most of the people who actually do win at sports betting, or hell, are even that great at trading, they don't have huge channels on YouTube, right? It's not the most exciting thing when you actually have to look at the damn work you gotta do to get good at trading and stuff like this. I'm a bit in a ranty mood today, only because, there's just so many people who want to get into trading genuinely because, they're in a rough spot in life, or they want to do what's best for their family, right? What's the purpose of your trading, right? Oh, I want to make money to help support myself, to get some extra income, right? There's all these great fiduciary reasons why you would want to trade. Now, a few of you are probably going to start dropping off here and stop listening. Words are going to go through one ear and out the other. But it's important for you to actually understand, why the hell are you trading? Where's the motivation for your money coming from, right? Are you motivated to trade just out of what's called contingent pay? That's a psychological term that you can go ahead and Google that. There's a whole field of psychology based around motivation by money called contingent pay. So if you Google that right now, you'll get like 20, 30 different PhD articles and theses just talking about contingent pay. And in trading specifically, contingent pay motivation is a huge, huge deal because it's counterintuitive. The more money you make, the less motivated you can become. So if you just have your sights with trading on just making as much money as possible, it actually can become counterproductive. There's like this self-sabotaging nature within people where they, don't actually do proper risk management. Now, don't get me wrong. There's two sides of the coin with risk management. There's risk awareness, which is like looking for trading opportunities, ways to make money. Oh, I see this asset's going to probably go up 10, 20% because this central bank or this commodity or this geopolitical problem is going to escalate or de-escalate or whatever your theory is, right? You have some expectation of the future that could impact market prices. And so you're like, oh yeah, that's a great opportunity. Good. You're looking at opportunities, risk taking. But on the flip side is the risk management. We have these tools up, so why don't I talk about them? I like talking about this particular tool because it's an actual distribution, right? I already said this is a distribution of low returns. Well, I can go ahead right here. I can just point at these percentages here, and it gives me all this information about, 87% of the time, your high for the day, your low for the day is above 140.7. So I can say roughly 90% of the time, the low for the day probably is above the weekly central pivot here. And that, look, how good are you guys at risk management, right? How good are you guys at knowing even the terms I'm about to go over? Like, what's a fat tail? What's a tail risk? what are the type of trading environments that create falling knives? What are the type of, moon scenarios when crypto just goes up, up, and away? I may be, losing some of you here because I'm getting really, really ranty now. And it could potentially go into a lot of super heavy math, which the stream absolutely will not go into. But it's important to just be aware of the different characteristics of how prices move and why they can move and the ways you can protect yourself against things you genuinely just cannot predict. Sometimes, and this is a big thing to understand, risks can materialize instantaneously. And if we're going back on that assumption I said a while earlier of, you're going to try, after doing all this trade research, getting good at reading all those outlooks, getting good at a trading strategy, maybe it's these indicators, who knows, whatever you do, you do you. But you finally find the confidence, you finally find some consistency in what you're doing with your trading strategy and your approach. And then all of a sudden, like that, it's like boom, 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 5 losses in a row, and you've risked 1 or 2% per trade, and now that's your first problem. You risked 1 or 2% per trade, and now you're down somewhere between 6, 7, or 20%. You just take a huge, huge hit on your account for what, right? So just because you have something that works okay, just because you've done all the research and it's okay, you have to have caps on your risk. So immediately when I look at this chart, reason why I like this indicator is I can go ahead and I can see, hey, this is where most of the lows occur. I can just visually see the character of this market where, most of the lows for this week occur right around here. And I have a technical indicator on here just to make it easier to understand, right? Between this R0.5 weekly pivot and this central weekly pivot, most of my odds are in this area here. Great. What's my probability? It's like 90% of the time the low is around here, usually this week. Okay, so that means I could probably start taking a few longs here, but I don't want to get too aggressive until I actually see the reversal, because this is going red, 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 red right now. So until I see a reversal, guess what? I'm going to be doing a 20, 30, 50 basis point approach, where maybe this first trade is 20 basis points. Remember, a 1% trade is 100 basis points. And the reason why I don't like 1% is because in the world of diversification, which is another layer of risk management, and something that actually could help make you a more profitable trader, right? Because instead of you trying to catch the top performing asset day in and day out and week in and week out, what you're trying to do is, of these 3 assets, I'm pretty sure these 3 are going to do pretty well. So you could go ahead and trade those 3 assets, and then maybe 2 of them lose, and then 1 of them does really, really well. And what will make the difference in whether or not that one trade actually makes you money, or even, gets you to break even, is going to be all about positioning. So if you position those 3 trades exactly the same, you're going to be down money. You have to position the 2 losing trades with less size than the 1 trade that worked out and won. So how the hell do you do that? You can't look into the future, right? You can't look into the future and just determine, this one, I know this one for sure is going to work, so I'm going to put more money into that one. No, you got to have a system. You gotta have some expectation. And then you have to be reactive to being totally wrong and that third trade still not working. So how do you manage the risk of it, right? So it can get really simple, right? And it can get really simple only when you actually understand some of the very fundamental mathematics that kind of go behind how markets are priced. Now, if you can't do basic algebra, you probably need to make sure you finish high school. Because a lot of the things that require you to actually go with understanding how markets work require a little bit of math. You can't be afraid of math. You know, once you actually get into doing some math, it actually can be quite enlightening. And look, some people are going to be like, oh, he said I have to do math, and math is so hard for me. Well, just stop saying math is hard for you. You know, you can add 2 plus 2 all day long. You can multiply 2 plus 2 all day long. Math is only 4 operations: addition, subtraction, multiplication, and division. And all you got to do is work with some fancy rules and notation. You just take it one rule at a time and take as much time as you want. No, you're not being graded on time. This isn't a classroom. If you need 2 hours to review some formula, some equation, take the 2 hours to review some formula and some equation until you actually have learned and understood it. Because if this is what you want to do, trading, right, you got to learn about how markets operate. And, well, a lot of that's math. You're gonna have to learn some basic math stuff, especially if you want to do the risk management properly and the position sizing properly. I mean, you know how many Google searches are out there for the Kelly criterion and half Kelly and all that stuff? Kelly is a formula for position sizing. And you know what a prerequisite of the Kelly criterion is? It's probabilities. You need the probabilities of your win-loss of your strategy to know your position sizing. So a lot of the stuff that I show in these streams can get kind of intertwined with like multiple different topics, and that's kind of where, looking at some quant stuff can get a little bit confusing. Because one topic is connected to like 5 other topics, and those 5 topics are related to like exponentially more topics. So there's enough to learn in the world to last your lifetime, plus a little bit more. So get used to learning and get used to enjoy learning about a lot, right? And, you know, if something's a little difficult, all right, it takes you a little longer. So what? Just enjoy their time. How about this? I'm going to review a little bit of risk management that I've done today on that euro-dollar trade. Because I took a hedge trade on euro-dollar. So, like I said, it's like, hey, right around here, I went long because of these pivot probabilities, right? Yay, pivot probability, weighted low. Probability weighted pivot low. Hey, there you go. Now, if we cross that S1 pivot, I'm definitely getting out here. And we are still quite close here. And if we look at the size of these candles are quite large. So volatility has kind of increased from here. The volatility from here is probably still somewhere in this signal. So there's a non-zero chance that this goes lower to like this 130 level. And you can see the probability even increases right around here in this zone around 110, 130, or 110.3 to 110 flat. So if I go here you can also see how the distribution of lows changed. So if we go back to dollar yen, see how this is a different shape than euro dollar? Euro dollar has like two bumps in it, right? There's a bump up here and a bump right there. And you can look at these numbers and say like, oh, wow, the probability of finding your low for the week increases right around here. And then it decreases around here only to go back up again. And this is something called bimodal. I'm teaching you some basic stats. Just hang on with me here. If you want to learn how to interpret these indicators, this isn't like there's no equations here. I'm just showing you how to read this stuff. So this is something called bimodality, right? It's a feature of these distributions. This first peak here, it makes sense that in a very, very bullish week, you open, the low is not too far from the open, and you just go up, up, and away, right? So this is probably, this area of the distribution is probably characterized by weeks where you had a really, really bullish week, and the low was very close to the open, right? So we got this hump in our distribution. Now the next part is this area down here, and it's lower than the current price, so this is actually a risk. And because these probabilities are actually on the higher side, this is actually still quite a realistic scenario where we could be trading in the 110.4, 110.3 area sometime this week. It's still absolutely in the cards to see prices around here this week. So the risk isn't totally gone for this long trade that I took, right? The risk isn't totally gone here. And pivot probabilities uses a different data set than this range probabilities indicator. That's this green thing. That's range probabilities. So this is saying, okay, there's a risk right here, and the probabilities here, they spike up, right? And this is where, oh, probably during a bearish week, you get most of your lows pretty darn low, right? So maybe when you have especially bearish weeks, this is usually where you find your low during a particularly bearish week. And that makes sense. This is where you find your low during a bullish week. This is where you find your low during a bearish week. And then this little middle ground area is just staring at us right now, and it's making us quite indecisive and careful, right? And you wouldn't have known that just by looking at the chart or just by looking at these pivots. Now, a lot of people, when they're doing range trading, will just bias their pivots, standard bullish, and they probably would have already been stopped out if the spread was high enough. And then you have range bullish. And these guys are actually getting long right here. And they're putting their stop right there, which is reasonable. But as we saw with the probabilities, getting that stop hit actually it happens quite frequently. So it's either, oh no, you got to have your stop like way down here where your probabilities start getting super thin. See how the colors get duller and more transparent, right? So the probabilities are getting smaller, and this is where your falling knife tail risk stuff occurs. So it's like, okay, this seems like reasonable, but man, that's a far off stop. So the next thing is just to put your stop just before you cross the regime. So note how I said, hey, bimodal, right? Either very bullish lows here, very bearish lows here. Well, this is a regime for bullish candles. This is a regime for bearish candles. And we're right smack dab in the middle in the indecision spot. So either this thing's kind of like a coin flip right now, whether or not it's going to go lower or not. So I think, okay, this is like the perfect thing to try and hedge out a risk, right? By going long here. So let me go ahead and show you what I did today to hedge out this risk. I went to New Zealand dollar, and I selected it because it had the largest gain out of all the US dollar pairs. And I went to the daily time frame, and I looked, and I have this trade plan actually here in the Discord. If you look up here, and this is free to view, you don't need to be in the trade group or anything. Here's the whole freaking trade plan. The whole freaking thing. And I was posting, hey guys, you know, most of your highs occur right around here. And look, here's your high distribution. Here's the pivot. Here's the price. I'm doing this because I'm hedging a euro dollar long position. I'm like, hey, you know, things are looking pretty well, and I'm posting updates. I invite you guys to join the Discord and post your own trade plans. And once you get used to actually posting trade plans in these forums on a consistent basis over and over and over again, see, when you post a thread like this, it's a hub for everyone else who's trading the same asset. So if someone's doing research, reading those outlooks, and it's like, hey, on page 3 of this outlook, you know, real quick, actually, there's, what is it? Westpac, Australia and New Zealand Weekly. Westpac is the largest bank in Australia, and they do research on New Zealand as well. There's gotta be stuff in here. Look, New Zealand's open, you know, economic outlook, their OCR rate, they're expected to not change it, so that's not too good, which means, oh, probably most of the New Zealand dollar move is going to be dollar dependent. So if the Fed is expected to hike 25 basis points and New Zealand is expected to do nothing, well, then it makes sense to check, oh, here's ANZ's New Zealand Weekly. And by the way, this is actually one of my favorite outlooks for New Zealand. The document concludes that the analysis for the New Zealand dollar exchange rate, it notes that New Zealand dollar has been underperforming against the US dollar, with the New Zealand US dollar exchange rate falling. The document suggests that this underperformance is due to the market pricing in a more hawkish Federal Reserve. Oh my God, it's like I have a habit of reading outlooks and I can almost predict what these guys are going to say because I've actually read them and I understand why they're making the decisions that they're making because they explain why they're making their decisions. Like, just read the damn outlooks, guys. Like, come on. I just demonstrated it right in front of you. Like, this is exactly why you should be reading outlooks, right? And sure, you can read these summaries, but you're best off reading these whole things in their entirety if you're new or an intermediate. It's like the quickest way to get competent, at least competent in knowing what you're talking about in the first place when it comes down to at least FX and central banks. So real quick, let me go ahead and check up with you guys here in the chat. Let's see here. Santiago, thanks. Ricardo, thanks. Hey, glad I'm back too, Rick. It counts for those that listen. Thank you, Joe. Absolutely. If it goes through one ear and out the other, none of this stuff matters. So I invite you guys to the server. Come post some trade plans. You know, I'm going to be posting day-to-day trade plans. Indicators can be used for daily and weekly stuff. If you want to like join the trade group and get these indicators and get one-on-ones with me, and you know, you want me to handhold, walk you through, you know, telling you to read this stuff, telling you to fill out a survey, telling you to do, you know, if you want me to walk you through the stuff, you want access to these indicators, $100 a month in the WAP, join the trade group. Link to that's in the description. It's called the Baus Trading Group, right? And that'll get you access to everything in the Plan to Profit Discord. Okie doke. So looks like this was New Zealand dollar. All right. Let's go ahead. Wait for range probabilities to load. I was just working on the random number generator to help improve the simulation of these numbers. Oh, and look at that. Here's our 90% number. 90% of the time, the top for the day comes in roughly around here, around 1 to 15. Now, I did have some stops, right? I had a short trade here. I had a stop right there, and you can even see it in the trade plan, right? But I didn't even update the trade plan fast enough to show, although I will post proof right now. Let's see here. Transaction history. Where is it? 6214. Do I have to do this right now? Yes, I do. Man, a lot of trades. Where is it? Where is it? By the way, if you guys got requests, now is a perfect time to request charts for me to do analysis on. I'll also post this in the trade plan. Here is the timestamp of the trade. 2614. So that'd be short 26141. And I automatically set the stop, I believe, at 622. 622. And I didn't set a take profit because this is a hedge. And if the euro dollar trade gets stopped out, well, then this thing's probably going to go and make a new low on the day. So I'm either holding this till the end of day today or end of day tomorrow, depending on how I see progress on euro dollar play out. And I lucked out. I got the low, or rather, I sold the top here. And every now and again, that happens. You just get lucky. That's it. But, when you look at this and you're like, 90% of the time it tops out here, I feel pretty all right taking some risk for like 20 pips for like $5, on a $1 or $2 or $3,000 account. It's like, okay, I'll risk $10 here. I could potentially make $50. It depends on how much money you want to make, how much money you want to risk, and then your time frame overall, because there's an opportunity cost to putting the margin on for that trade compared to other trades. So you have to actually decide, okay, is putting on, how long am I going to have this hedge on? Is it better to have this hedge on actually than just to diversify into another trade where my trade plan, let's say of short USD, could actually play out more likely? Like, let's say on euro dollar, the whole reason why I'm long here is not because of any crazy fancy stats thing, but I'm just bearish on the dollar. Well, if I'm afraid that euro dollar isn't going to play out because of the crap PMIs that just came out, then maybe I can go to Aussie dollar and be like, well, it's probably forming a base here. I can put on a short trade here, a long trade there, and diversify. And just across all the US dollar pairs, you can diversify across and say, okay, $2 here, $2 there, $5 there, $5 there. On the first trade, you're not supposed to commit a whole lot, especially during these huge volatile moves. Look, if the very first trade you put on is sized at 1% of your account, and then you proceed to put on 5 more 1% trades, when you lose the 5%, you're going to have to make more than 5% to get back to where you were. And that's the first thing that you should learn when it comes down to trading. As far as the mechanics, your winners have to be larger than your losers. It's super simple, it's super straightforward, it's super common sense, right? But most people don't know how to actually do that. They're like, okay, I just go ahead and I put on 1% risk. And, sometimes I make 60 pips here, sometimes I lose 30 pips there. It's not necessarily just, okay, I've made X amount of pips. It's also about the quantity of the trades that you're putting on that are right or wrong. And especially when you're new to trading, there's a lot of confusion. You get stuck in the noise. You diddle in the middle of a range. There's all sorts of things that easily just go wrong. You try to do a mean reversion strategy in a trend. You try to do a trend trade, a breakout trade in a range. Now, can you predict if you're in a range? Can you predict if you're in a trend? Moderately, you can put a good guess onto it. I mean, look, the honest to God truth is that most of trading is best guesses. And that's why you have to look for the best opportunities all the time. And on the flip side, always make sure that you can never get screwed. Always make sure that, okay, while I try to pursue this opportunity to make some money, that I'm watching my back and that I'm, okay, if everything were to go wrong against me, all my 10, 12 positions were to go against me right now, what am I going to do? And especially if you're discretionary trading, 10 positions is quite a lot to manage in a snappy way, especially if they're across all, different assets. A lot of automated trading systems have hundreds of positions diversified across hundreds or at least tens and tens of different assets, and it manages those automatically, right? But we're talking discretionary here. When it comes down to discretionary, you just work your way into it, one asset at a time, two assets at a time, three assets at a time. There actually was a study on this. If you try and trade any more than three assets when you're just starting out, it doesn't work. As far as active trading, your performance goes down massively. However, they found that traders who had 4 years of experience and were doing good, they were managing 8 or more positions and were doing just fine. So when you start off, the reason why you start off small with your diversification is just to get a grip on, am I actually making good forecasts? Are my trading expectations lining up with what was actually realized in the markets? And that's going to come down to you becoming more competent by reading the outlooks and then talking with other traders as you're making your trade plans in that Discord. So then you can actually relate with other people. And guess what? Trading doesn't have to be a lonely enterprise. You don't have to, trading is the loneliest. Screw that. Screw that. There's so many people trying to make a buck with trading. It's endless. It's endless the amount of people who you can talk to. It's endless the amount of YouTube streams you can watch. It's endless the amount of forum posts. It's endless, it's endless, it's endless. Oh, it's the loneliest thing out there. Yet, there's all these TikTok girls, shaking their boobs, trying to get you to watch them as they, rant about some, some bachelor degree financial topic. Something that you just read on Investopedia for 5 minutes, right? And they're like, oh, let me just go down all the Investopedia articles, do some TikToks on them, and collect, a paycheck that's 5 or 6 grand. Oh man, that's such easy work. Those girls know how to hustle. Yeah. Oh man, oh man, oh man. Yeah, but I'm happy with my hedges. I'm happy with how my things are setting up. It looks like my hedge is now making more money than my euro dollar long. Yeah. That is very, very, very cool. So I've successfully risk managed live on the stream, and I'll go ahead and I'll pull up the charts. So here's yeah, you can see there's New Zealand dollar, and there's euro dollar. Ooh. And there's euro yen. Ivan got out right here at 158. The damn bastard. Guy made so much money in that trade. You know, it's like these little things that just make your day, and they give you such a big jump in your account, man. You know, with shit like this, you want it to give you a linear loss. That's a technical term, right? You want your gains to be as exponential as possible. You want a geometric growth on your account. And these little things are supposed to give you big vertical jumps in your net asset value, in your total portfolio's net worth. And as soon as you see those big ass volatile jumps, it's just like, okay, capitalize on that volatility right away. Just capitalize on it. However, when these sorts of things happen against you, you want that loss to be as small as frickin' possible. You want that loss to be as minimal for taking on the risk that you want as possible. You want your risk to reward to be asymmetric, positively asymmetric. And that just comes down to learning, getting competent at what you're trading if you're going to do this discretionarily, coming up with a reasonable system for identifying, okay, here's how I should actually price my risk, and then getting good at executing those trades, getting good at actually putting on limits, and on the day-to-day looking at areas, oh, today seems like a little expensive. Oh, today seems like it's, you know, a little cheap. Oh, there's this setup here potentially for the whole week, like with that weekly probability weighted pivot low. Or looking at it for the month, right? Because, I mean, hell, these range probability indicators work on every time frame. Let's look at it on a weekly. Euro yen on a weekly. Hey, we're likely at a low for the week. Roughly, I call it about 77, 78 per, or rather, it's somewhere between like 80 and 75% of the time the low for the week is in. And considering the positive movement here, I don't know about you, but this seems like it's just getting more volatile to me, so this is probably not going to be an established range sideways, especially as the Bank of Japan comes about talking during their meeting. I don't know, I'd just be careful once you start going past this 155.5 level. Like that's, yeah, 155.5, that's where you start to see falling knife stuff, like going back to this low sort of stuff. Going back to 154, yeah, that's like 150 pips right there. Wow, that's like a whole percent move. And that would be fantastic. But I'm only able to look at this indicator and actually identify that because I know some basic statistics. And I understand that, you know, power law stuff when it comes down to these charts. You know, I'm not the best in the world. I'll admit that I'm readily still learning. I mean, you know, look at the books that I'm reading, right? So it's not like, you know, I'm the absolute master. But I'm sure as hell more competent than a lot of people because I'm actually building the damn software, right? And I'm actually putting it into practice, showing people how to do the interpretations properly, and then all the caveats under the assumptions, the really shitty assumptions made by so many traders on so many basic things. Like a lot more traders are starting to talk about, oh, you shouldn't use technical analysis and da da da. Well, there's some foundation in the fractality, how fractals can be observed in markets, and how that's being proven. Actually, there's a guy who did a whole PhD on chaos theory and how markets behave fractally, and how the chaos in markets and the noise has some basic behavior to it. And that whole theory pertains to like, oh, in some situations, TA can work here or TA can work there. But you can rationalize those assumptions more robustly in a statistical definition. Now, are those interpretations still useful for our thick skulls and our brains? It's like, oh man, I just drew a line. And we topped out right there. Oh man, that's so simple. We had a top over here and a top over here. That's a double top. And then maybe this becomes like an ascending triangle sort of thing where the Japanese yen continues to get weak. So maybe we do some sideways motion. We make another low right around here. And either we break down or we break up. And it's like, at that point, it becomes astrology, right? What I say is don't do that. Stick to some proper probabilistic risk management. Because at least having some probability of the likelihood of an event and then properly sizing yourself into those probabilities as they realize themselves. And when I say realize, I mean you have a hypothesis, a trading expectation. So you take little trades going into that expectation. And then as the trade begins to realize itself, as price begins to agree with your assumption and move actually in your direction, that's when it's like, oh, okay, let's go ahead and continue to trade in that direction, trade in that direction. Add a little more, add a little more. And then you get to that 1% size and you're up like 200 pips for the month. And it's taken you like zero effort other than properly managing, how volatile is price right now? Are we at a likely top? Are we at a likely bottom? It's just about having the basic measurements to know when you're at likely tops, when you're at likely bottoms, or when you're off in frickin' La La Land, tail risk, moon cycle, like with Bitcoin. And you shouldn't be touching the damn thing. You shouldn't be touching the damn thing unless you're already long it when you're up here. Once you're up here, trying to predict where the top is like finding a needle in a very, 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 very fucking huge haystack, all right? This is finding needle in a haystack trying to short up here. That's just... At least you have some numbers telling you you're stupid if you do. Alrighty, this will be the last call for just if anyone wants, me to go over a chart or two, rant about the topic or whatnot. I'm going to make a call out that you guys come in, hop on into the Discord with me, make some trade plans with me. I'll be updating some of these trade plans as I go along this week. Again, this is the daily plan stream. So this stream occurs every single day, Monday through Friday, 4:30 Pacific to 7. It starts at 4:30 Pacific and it starts at 7:30 Eastern. So yeah, whenever you guys are up to hang out in the Discord, hop in the voice chat. post some trade plans, commentate on some trade plans, be respectful of each other, right? Just share your opinions and share the research that you do and discuss things civilly. Because as soon as you hold an opinion so strongly that you're offended by other people being against you, it means that you hold that position and that view way too strongly. And I'd rather loosely hold, the very famous quote, I'd rather hold opinions very, very loosely. I'd rather lose my opinion than lose my money, right? Lose your opinion first before you lose your money. And you know what? That goes for me, that goes for everyone. And everyone is going to have those trades. I just was calling for, I was shorting euro dollar for like a month and a half, and it worked for like half of that month. And then FOMC did not hike rates in June, even though everyone was saying, oh, they're not going to hike rates. It's like, there were some very smart people saying that they were going to hike, and I was being very obvious, hey, they very likely could hike, but I'm anticipating a surprise. And the only reason I'm still here and still trading is because I fucking managed my risk on that trade. It was a pretty stressful trade because I was managing that thing in and out, in and out, in and out for like a whole month and a half. And that's one of the longest positions I've managed in a while. Thank God I had other assets to trade. Ay, ay, ay. I had some pretty killer trades on Aussie dollar during that time. Yeah. So again, I invite you all to come join the Discord. Post your trade plans with your own indicators if you want. It is totally fine. You got your own indicators. Post, promote them, whatever the hell. Just disclose that it's yours or whatever the hell. And yeah, I'll look forward to the commentary you guys have to share and the stories you have to share. And if you have enjoyed my energy and my feedback, give me some feedback. And also, if you do want to help me out a little bit more today, just a little bit more, there's this trading assessment survey. Hop in to the Discord, go to the announcements channel, and fill out this little quick. It's like 5 questions. It's multiple choice, just about your own trading expectations for the week ahead. It's totally anonymous. Just ask for your email so then I can confirm you're not a bot. And then I go ahead and I summarize this survey and all the trading expectations from everyone in the survey. And I'm trying to get my own sentiment indicator going on here, my own community run sentiment indicator from people who watch my stream, and maybe from a couple of other trading communities, from maybe hopefully people who would like to contribute to this survey of retail traders. Because believe it or not, this survey actually lines up pretty closely with, well, what actually happens in the market. I'm actually quite surprised when people who are trying to actively get better at trading exercise their ability to think in making trading expectations across many different asset classes. It actually tends to be fairly accurate most of the time, outside of surprises. So I think this data would be incredibly useful. If you'd like, spend the 2 minutes, the 1 or 2 minutes it takes to fill out the survey, help me out, and I'll share the results on stream tomorrow with you guys, and I'll break it down. And a lot of it actually comes from how I created this survey and how I'm interpreting it. Actually comes quite a bit from that book I just flashed. All right, you guys. That is it for today. I hope you enjoyed the energy. If you want, leave some money bags in the chat. Spread the love, share the cash, and share the stream. I'm back after so long. I've been gone for about 2 weeks, and now I am back. So, Thank you guys for watching, and I'll see you guys tomorrow. You go ahead and take care. I'll be hanging out in the Discord if you want to chat. Otherwise, see you guys tomorrow.